The financial landscape is undergoing a significant transformation. A new wave of innovation, decentralized finance or DeFi, is challenging the traditional paradigms of the financial system. DeFi leverages blockchain technology to create a more open, transparent, and accessible financial ecosystem. DeFi has garnered significant attention for its potential to disrupt established financial systems. It offers an alternative to traditional financial intermediaries like banks and stock exchanges. By leveraging the power of blockchain technology, DeFi enables peer-to-peer transactions without the need for intermediaries. This has profound implications for financial inclusion, access to financial services, and the overall efficiency of financial markets. The emergence of DeFi represents a paradigm shift in how we think about and interact with financial services. It has the potential to empower individuals and businesses, fostering greater financial sovereignty and control over one's assets. Decentralized finance, or DeFi, represents a fundamental shift in how we perceive and interact with financial systems. At its core, DeFi leverages blockchain technology, the same technology underpinning cryptocurrencies like Bitcoin, to create a financial ecosystem that is open, transparent, and accessible to all. Unlike traditional finance, which relies heavily on centralized institutions like banks, DeFi operates on a decentralized network. One of the key characteristics of DeFi is its permissionless nature. This means that anyone, regardless of location, credit score, or financial status, can participate in the DeFi ecosystem. There are no gatekeepers, lengthy application processes, or discriminatory barriers to entry. This open and inclusive nature of DeFi has the potential to bring financial services to the unbanked and underbanked populations around the world. Transparency is another cornerstone of DeFi. All transactions on a blockchain network are recorded on a public ledger, accessible to anyone for verification. This inherent transparency fosters trust and accountability within the system. DeFi goes beyond simply replicating traditional financial products, introducing novel financial instruments and applications. Traditional finance, the system we've grown accustomed to, is characterized by its centralized structure. Banks, financial institutions, and regulatory bodies act as gatekeepers, controlling access to financial services and dictating the rules of engagement. This centralized model, while providing a sense of stability and familiarity, has its shortcomings. One of the primary criticisms leveled against traditional finance is its inherent lack of transparency. The inner workings of financial institutions, investment decisions, and risk assessments are often shrouded in secrecy. This lack of transparency can breed mistrust and create an uneven playing field, favoring those with insider knowledge or access to privileged information. Access to traditional financial services is often restricted by geographical boundaries, socioeconomic status, and bureaucratic hurdles. Obtaining a bank account, securing a loan, or investing in financial markets can be a daunting and exclusionary process for many individuals and small businesses, particularly in developing countries. Section 4. DeFi versus traditional finance, a head-to-head comparison. The emergence of DeFi has sparked a debate about the future of finance. Let's delve into a head-to-head comparison. Decentralization versus centralization. DeFi champions decentralization. It operates on a distributed network, eliminating intermediaries. Traditional finance is centralized, controlled by institutions. DeFi promotes financial inclusion, offering open access. Traditional finance often presents barriers to entry. Transparency is a cornerstone of DeFi. All transactions are recorded on a public blockchain. Traditional finance operates with limited transparency. DeFi platforms operate 24/7, offering lower fees. Traditional finance is bound by business hours with higher costs. DeFi fosters innovation and flexibility. Traditional finance is slower to adapt to new technologies. Section 5. Opportunities and challenges in the world of DeFi. DeFi presents a compelling alternative to traditional finance, offering a glimpse into a future where financial services are more accessible, transparent, and efficient. One of the most significant opportunities presented by DeFi is its potential to bank the unbanked and underbanked populations around the world. With its permissionless nature and minimal entry barriers, DeFi can empower individuals and businesses that lack access to traditional financial services. The transparency and immutability of blockchain technology underpinning DeFi can revolutionize supply chain finance, trade finance, and other sectors plagued by opacity and inefficiencies. Smart contracts, self-executing agreements coded on a blockchain can automate processes, reduce reliance on intermediaries, and enhance trust between transacting parties. However, the decentralized and unregulated nature of DeFi also presents challenges such as investor protection, market manipulation, and the potential for fraudulent activities. Section 6. The evolving relationship between DeFi and traditional finance. The emergence of DeFi has undoubtedly disrupted the financial landscape, challenging the dominance of traditional financial institutions. However, rather than viewing DeFi as a threat, there's a growing recognition that these two systems can coexist and even complement each other. Forward-thinking financial institutions are exploring ways to integrate DeFi protocols into their existing infrastructure. This collaboration can lead to the creation of hybrid financial products and services that combine the benefits of both worlds. For instance, banks could leverage DeFi lending platforms to offer more competitive interest rates to their customers. The regulatory landscape surrounding DeFi is also evolving rapidly. Governments and regulatory bodies around the world are grappling with how to foster innovation while mitigating the risks associated with this nascent technology. Section 7. Conclusion. Shaping the future of finance. Decentralized finance represents a paradigm shift in the world of finance, challenging the traditional notions of how financial systems should operate. Its potential to democratize access to financial services, enhance transparency, and foster innovation is undeniable. The future of finance is likely to be shaped by the interplay between DeFi and traditional finance. As both systems continue to evolve, we can expect to see greater integration, collaboration, and perhaps even a blurring of the lines between these two seemingly contrasting worlds. By understanding its complexities, embracing its potential, and addressing its challenges, we can harness the power of DeFi to shape a better financial future for all.